Greetings traders and welcome to your first Forex Focus of 2016. I'd like to start off by wishing you all a very happy new year. I hope you all had a lovely festive period. You all got some nice rest there and you're ready and raring to go for the new trading year ahead. What we're going to do in this Forex Focus is a little bit different to what we do in the others. So as opposed to looking at any one individual trade that we're looking to take for the week ahead, what we're going to do is something that my brother and I do every single year. And basically that's just take a little bit of a step back, look at the markets, look at where they've came from, look at what the sort of like the bigger themes have been, and then try and look ahead at 2016 and obviously the year ahead, and develop some sort of a view or a bias as to where we believe the currency pairs are going to go. Now, obviously, you're going to be wrong at some points, and that's why you use things like technicals in combination with the fundamentals. But we just find that having a bit of a view as to where the markets are going generally helps us take better trades and helps us to be more efficient and effective in the trades that we take. So, for example, if we see a setup, if our view is, let's say, for example, that the dollar is going to continue to strengthen, and we believe that maybe it will strengthen against something like the Canadian dollar, for example, and we get an opportunity to take a long in that particular currency pair, we're going to be more confident about that, and perhaps we'll then look to take a bigger size with that. It's not to say that if the dollar CAD then starts to drop a little bit and we get an opportunity to take a short trade that we don't take it. You can absolutely do that, but perhaps you do that with a little less size and your expectations on how long you're looking to hold that trade for will be a little less. So building up a view, obviously, as I said, on the one hand helps us in terms of the trades that we get into and perhaps not take, but also the second and a very important part of that is it also keeps you in tune with the market. So even if you were to take a view and even if you weren't right, at least you're thinking about the markets from a logical perspective. And once you start to do that, you will see that your trading results start to improve a hell of a lot. Okay, so that's exactly what we're going to do in this Forex Focus now. So without further ado, let's jump over to the charts and take a look at the major currency pairs and see what we believe they're going to do in 2016. So we'll do it in alphabetical order. We'll start with the Australian dollar. Now, the Australian dollar, if we take a look at it on let's look at it on the daily chart for a minute there. If you take a look at this on the daily chart for literally the past year and even longer than that, actually the past year and a bit, this particular pair has been falling off a cliff. Now that's, on the one hand, that's got a lot to do with the expectations that the Federal Reserve would start to raise interest rates, which they did at the end of the year. And you'll see that a lot of the pairs against the dollar will react like this as well. So it won't just be unique to the Australian dollar. But what we have to do here is try and look a little bit further than just what's going on with the US dollar and see if there are any contributing factors to this particular movement in terms of the Australian dollar. Okay, so was there anything from the coming out of Australia that would basically help with this particular downtrend or assist with this downtrend here? And there absolutely was in 2015. So 2015, you had the RBA there sort of very dovish in the monetary policy. They were decreasing interest rates and all of that kind of jazz. And that obviously contributed to the fact that the Australian dollar literally lost a lot of ground over the past 18 months. As I said, not unique to the Australian dollar. We also had it in the euro dollar. But looking ahead to 2016, do we think this is going to continue? So yes, we believe that the US dollar and the Federal Reserve are going to continue to raise interest rates, although I would say that something that we have to focus on as far as the US is concerned is, first of all, what the Fed heads, what their sort of rhetoric is going to be like coming into the new year. So in the January meeting, the February meeting, what are they going to be saying? Are they still going to be as hawkish as they were pre-2016 when they raised the interest rates, or are they going to be a little bit more dovish in their policies? And that's something that's going to play a big role in where the US dollar goes. But aside from that, the RBA last year, obviously it was cutting interest rates, but towards the end of the year, it started to change its stance and started to be a little bit more optimistic about its outlook. And that's what you can see here in this last quarter of 2015, where basically the market starts to go sideways, and it looks like we have some sort of bottoming price action going on here. So in terms of the longer term view, we've got two key levels that we'll be looking at. Obviously, if the market breaks below this level here, we want to see what is it breaking below based on. So is it more coming out of the US, or is it something coming out of Australia? But if it breaks to the upside here, we're fully anticipating that the market can start to rally somewhat, maybe recover some of its losses from last year. And our first eyes will be to see if we can get up towards these highs up here around the 0.81882 type level. Okay, and as I said, from a fundamental perspective, the Bank of Australia are a little bit more optimistic in their views, and if they can hold that optimism, then we can certainly see that the prices will recover. We'll also be keeping an eye on the iron ore prices. So the iron ore prices, all commodity prices literally have just been tanking over the past 18 months, 2 years. If we can see some bottoming action in that and a bit of a recovery, obviously we know the Australian dollar is closely tied to iron ore prices. So if that then recovers, we can then see a little bit of a boost in this particular currency here. Moving on to the euro dollar. Now this one's something that's a little bit more tricky, okay, because on the one hand, we do have the fact that the US are raising interest rates and they're in a rate hike cycle, and obviously the ECB are exactly the opposite of that, but we feel that a lot of that move there was priced in towards the end of the year. So that's why you saw that massive spike up there in December. Basically, when the Federal Reserve eventually did raise interest rates, it was kind of just showing that ultimately it was in line with the market's expectations. That's what the market was expecting it to do, and hence you saw a lot of unwinding of the positions that were already built up over all of this time. So in terms of where the euro dollar can go next year, I think in the short term, it's going to be quite a difficult one. We're going to be looking at this range here. Okay, so you've got the high to the low of that range at 1.1725 and down here at 1.04 around the 6.6 level. And basically, we're going to keep a close eye on this because from a fundamental perspective, yes, you kind of have a divergence in monetary policy, but a lot of that was already anticipated last year. And hence we're going to, as I just said just now, it's really going to be about watching what happens in the first meeting or two of 2016 and seeing what what's coming out of the central banks. What are they talking about? Are they dovish? Are they hawkish? Are the ECB going to look at expanding their asset purchasing program? They already said that they'd extend it, which is fair enough, but are they going to need to do a little bit more? On top of that, we obviously see that the US economy is printing some slightly negative data. The ISM's coming in, it came in below the 50 mark, which obviously isn't a great sign in any case. So from the US perspective, we see that their economy is going to start to falter. From the European side of things, we think that they're going to benefit quite a bit from the fact that the euro is so weak. It basically makes their goods cheaper for people to acquire from overseas. So that could obviously play a part in the European economy and their recovery in 2016. So that's something we will also be keeping a close eye on. So from the moment, it's quite a difficult one. We don't really have a bias one way or another as far as the euro dollar is concerned, but we're just going to be watching it very, very closely throughout the first month or two of 2016. The pound dollar is a bit of a horrible one. I mean, if I show you the weekly chart here, you can see that it's been in this range. And granted, it's quite a large range, but it has been in this range for basically the last 5 years. So from the crisis, from when we dropped from the crisis up here at 2.1166, as you can see there, down to the lows in 2009, at 1.3504. Since then, and over the past sort of 4 or 5 years, if I just bring this up here, we've been caught in this range here. So the market, every time the market's come up, it's broken back down, and every time it's come down to the lows, it's broken back up again. And really, there isn't a lot in terms of fundamentals that would push us one way or the other in the immediate future. The Bank of England keep disappointing the markets. The markets keep expecting a rate hike, and that never gets delivered. So from that perspective, from the expectations perspective, we're not sure if the markets are a little bit, what's the word for it, obviously they're disappointed in the Bank of England, but we're not sure if the markets are sort of a little bit bored with that particular theme there. And hence, there isn't much of a catalyst there to move the pound dollar in either one direction. What we do have coming up in 2016 and potentially or early 2017 is the referendum in the UK, which could obviously affect both the pound and the euro prices. But that's a little bit way off at the moment to be able to draw any real sort of a view there. So from the moment, as I said, the pound dollar, really we're going to be looking to buy bottoms and sell tops. Moving on to the New Zealand dollar. Now this is very much like the Australian dollar, okay? Because basically, again, the Bank of New Zealand last year were cutting interest rates, and then they came out in December with their final cut and basically said that would be the last for a little while, and potentially they would then look, well, not necessarily raise interest rates, but they were a lot more optimistic about their outlook for the coming months. And basically that is reflected here on the price. So you can see that we've got a reversal at the bottom here. So we've got a 1, 2, 3 reversal. If the market then breaks up above this level here, this structure here, then we'd be anticipating another move up towards sort of these highs around here would be the first stopping point. Okay, and if we can get up towards those highs, then who knows. But basically, as far as the better performers are concerned, we see that with the New Zealand dollar and the Australian dollar, we're going to get more and better moves out of those currency pairs than we will necessarily with the euro and the pound dollar. Okay, and as I said, the New Zealand's is a very similar story to the Australian dollar, so I won't bore you too much on that. Just basically to show you that this is the structure level that we're looking at here, and if we get above that level, then we'll certainly be looking for some long opportunities. The the dollar franc even is a bit of a tricky one. I mean, from our perspective, we've sort of steered clear of the franc here over the past year, ever since they removed the floor from the euro, and the markets dropped through the floor, and obviously you had our pari go out of business, and the whole markets were a bit of a mess in the first quarter of last year because of this. And basically since that point, then there hasn't been all that many opportunities in the Swiss franc, and for that reason, and we believe that's going to continue into 2016. So for that reason, there's nothing major that we're looking at in terms of a longer term trend that we would be looking to exploit in the Swiss franc next year. So we'll just leave that one there. The dollar CAD is an interesting one. Now, we completely expect the Canadian dollar to continue to depreciate next year. All of this move here, as you can see, obviously Canada hasn't had a great year in terms of their economy generally. Add that to the fact that the Canadian dollar is heavily reliant on oil prices, and oil prices are on the absolute floor. We don't see much changing here. You see, from a trading perspective, you look at what's driven a particular price over the past 6, 9, 12 months, and then you look forward and you say, well, what's driven the price over the last year or so? Is that going to change in the immediate future? And if it's going to change, then potentially you can look at trading in the opposite direction to the overall trend. But if you don't think that something's going to change, and we fundamentally don't think that oil prices are suddenly going to double overnight, then you can't really build a very strong case for saying that the dollar CAD is overextended. Okay, do you know what I mean? So basically, if we would say, well, oil prices are rising, we think that this is going to be the year for them, they're really going to rise over the next 12 months, then yes, we could say, well, actually, we expect the Canadian dollar to appreciate and to recover some of its losses in 2016. But the way things are right now, we don't really see that as being is being realistic. So I'm not saying that we won't get some sort of a pullback here. In fact, I'm looking for a pullback because I prefer to trade to the upside once we've had a little bit more of a correction. But that's all we think it's going to be. It will just be a correction until some of the fundamentals change there. If Canada's economy starts to do a little bit better, again, it contracted the last quarter. So until that changes, or until oil prices start to rise, really and truly, we can see any sell-off of the dollar CAD as just being a correction of the longer term uptrend. Looking finally at the dollar yen. The dollar yen for us is one that really, if we read a report on by Morgan Stanley the other day, and basically they have the fact that the yen's going to appreciate quite a lot in the coming year. But from our perspective, we're not entirely sure that we agree with that. We kind of see this as being a pretty decent one to exploit our long dollar theme for 2016. So obviously the dollar CAD would be one because the Canadian dollar is going to remain weak. And also the dollar yen here, we think that we might, if we can get above this level here, the 126 level, which if I zoom out for you a little bit, you'll see just how significant a level that is. So that's been played with back in 97. That level there again in 2001, 2002, nearly came up to it in 2007, and we're at that level now. So basically from a trading perspective, we're ultimately looking for the market to rise above this level here. And if we can get out above this level and the Federal Reserve remain hawkish, then we will possibly looking at this particular currency pair here to express that view and to look to get into a trade and potentially get out there towards the highs at 135.08. In terms of being proven wrong, we kind of see this level here at 116.19, around that level there, as being the point there that we're proved wrong in our view on the dollar yen. And then obviously we'll start to look to see if there's any opportunity to take the market down short towards this level here. Now, clearly I've been talking about these currency pairs from a much longer term perspective. So some of you are going to be looking at this thinking, well, that's great, but how do I actually trade that? Because you're talking about things that are going to take place over the course of 2016. But what am I going to do in terms of my trades right here, right now? Next week, 2 weeks time, 3 weeks time, that kind of good stuff. And basically the way that you're going to do that is, as I said at the beginning, you're not necessarily going to trade it for the long term, but if things start to line up according to our fundamental views, so let's say for example looking at the dollar yen chart that we just literally this second looked at, if that starts to break out to the upside, then we'll be getting into a trade and expecting it to go with us. So maybe we'll give it a little bit more room to be able to wiggle up towards a more substantial profit target, as opposed to if the market goes short, which is against our fundamental view. Yes, maybe we may take the short opportunity. We'll trade off of the back of the momentum, but it wouldn't be something that we're looking to hold over the next sort of, couple of weeks to a couple of months. We wouldn't be looking for a bigger profit target. Does that make sense? So I know that some of you will be looking at this thinking, well, that's much longer. That's a much longer term horizon. So perhaps it doesn't really apply to me, or I'm not interested in it. But I promise you, if you look at this stuff, if you take a look at the markets from this perspective here, you're going to put yourself in a much better position to make money in the long run. I did a video a couple of weeks ago where I said that over the past 18 months, going back to when we were in Barcelona and we did that interview for that TV channel, we said that we were looking to short the euro dollar. And this is a prime example of how we would use that. So over the last 18 months, we've only been looking for shorting opportunities in the euro dollar. And sure enough, we've come out way ahead of the game as a result of that. And that was based off trading the technicals off of a bit more of a fundamental theme and a fundamental driver. Okay, and that's exactly the way you can use this here. So if you're trading against the fundamental themes, maybe you don't look for as big a profit target. If you're trading with the fundamental themes, then you look for a more substantial profit from your trades, and maybe you go in with a little bit more size. And that's basically the way we play these things here. So I hope you enjoyed the first Forex Focus of 2016. I hope you found a lot of value in it. If you've got any questions at all, please feel free to post them below the videos. That's one of our New Year's resolutions, is to be a lot better at responding to all of our comments on the Forex Focuses and the various other videos that we post out there on YouTube. So thank you very much for watching the Forex Focus, the first one of 2016. If you've been with us since 2015, thank you very much for paying attention to what we have to say every week. It's obviously very much appreciated. Remember that this is for educational purposes only, so we're showing you what we're doing with our own accounts. We're not saying that you need to trade any of these. You still need to go away and do your own analysis. Okay, but hopefully this gives you a point in the direction that ultimately we're looking in. And you can get some good value out of that. If you like the video, please give it a thumbs up. Please feel free to share it with any friends, anybody you believe will benefit from our analysis even each and every week. Other than that, thank you very much again for watching this, and I'll look forward to speaking to you in next week's Forex Focus. Take care now.